Hello, people, and welcome to another episode of your daily forex market updates and forex talk with yours truly, the Alpha Miracle. Yeah, and today we're going to be doing something very special. We are going to be talking about how to build a trading plan. And before we do that, we're just going to dive into what happened in the market today. So we're not going to waste too much time on that, but just this is another day of me for testing this strategy and what happened today. This is GJ. We're currently looking at GJ, and we saw a signal around 12:15, and we took that. Okay, I need to rephrase that. If we had taken that, because it's not a live account, if we had taken that, it would have been a -1 or -0.5. So this is GJ, and it was a loss today, right? So let's check for SPX. SPX 500, if we had traded today, we would have taken 2 losses back to back. All right. I mean, I saw it and I was like, okay, this doesn't look like it's going to go down, but based on the strategy that we're using, yeah, this is what we have. USD CAD was very rosy today. For today, it was a wonderful one. We saw the signal around 9 and it just did a sweet 1 to 3, just like that. Very sweet trade. Around 5, we're done. Euro USD, the main, my favorite pair. Honestly, Euro USD has to be my favorite pair. After that, USD CAD, and after that, GBP JPY, then SPX 500. Yeah. So Euro USD, what happened with Euro USD? We saw the signal at 10:15 and we got in around 10:30, and it was a wonderful trade, very wonderful trade. And this news effects just, but then we'd have been out of the trade because we're using a static risk to reward ratio. Okay, so yeah, that is that. So let's just dive into the forex chat of today, our topic for today. And yep, I've got my journal and I've written down everything, so don't mind me if you see me looking downwards like this. I'm just trying to pick how to build a trading plan in 7 steps, just 7 steps, right? First things first, you need to select the time frame. And what do I mean by select the time frame? You need to first figure out what type of trader you are. Are you going to be trading on the daily time frame? Are you going to be trading on 4 hours, the 1 hour, or are you going to be trading on the 15 minutes or the 5 minutes? What that means by extension is, are you a scalper? Are you a day trader? Are you an intraday trader? Are you a swing trader? Are you going to be taking positions like you hold it and you just leave it for months? Okay, so first on the list is for you to pick a time frame. The second thing you want to look at is your risk management. Your risk management, very, very vital, very, very important. So with the risk management, you want to do anywhere between 1% to 3%, which is industry standard, right? But based on data that I have been receiving, based on data that I've been gathering, I'm of the opinion that 0.5% or even a bit lesser is, what you should be risking per time. All right, is what you should be risking per time, not just even per trade, per time. But that's with respect to prop firms. That if you're going to be using a prop firm like I plan to do, right? If you're going to be using a prop firm, once you are funded, you should use 0.5 because I think it will just help the sustainability of the account in general. However, if you are going to be using a personal account, right, I think you can go as high as 3% per time or maybe 3% per day. You can be a bit more conservative. But we're not going to limit it to just, the conservative style. If you are going to flip an account, I highly do not recommend this. But if you're going to flip an account, then anywhere between 20 and 25%, that way that you have about 4 chances to or 5 chances to blow that account, because truly you shouldn't be thinking of how much can I gain. You should be thinking more about how much can I lose. What I recommend for you want to have a minimum exposure, as little exposure as possible. And when you are trying to pass a funded. When you're trying to get funded, you can still go as high as 2%, 3%. Just get funded, right? Most prop firms do not care how you pass, because at the back of their mind, they're already like, this guy is going to lose the money. But I'm going to strongly suggest that you use 0.5 once you're funded. And you might as well just start with 0.5 from the evaluation stage. Nobody is rushing you. You're not, the market is not running away, okay? Third thing is you want to check out for the market conditions. You want to specify which market conditions am I going to be trading in. And really, there are just two market conditions that you can potentially be trading in. You can either trade in a ranging market, that's when the market is just moving up and down in a range or in a channel, right? Or you can trade a trending market, right? So it's one of the two. It's either trending upwards or trending downwards, or you're trading in a range. Really, anything outside that, I don't see why you should be trading. You don't have to be trading in a choppy market, right? Just know that you're ready to lose your money. Fourth thing on the list is you want to be sure of the market. What do I mean by this? Which of the financial markets are you going to be trading? Personally, I have decided to do forex trading with a bit of indices. Why? The indices I'm trading is, the SPX 500. Just that's the only one I'm looking at. I'm not looking at commodities. I'm not looking at gold. You can choose to trade gold. It's fine. You can choose to trade the cryptocurrency market. That's fine. You can choose to trade stocks. That's fine. But you have to be clear on which market you want to trade. For me, I've decided to trade the forex market. The fifth thing is you want to be sure of your entries. What is your entry criteria? It could be chart patterns, candlestick patterns, Fibonacci, it's EMAs, whatever your confirmation is. You just want to be sure of your entry. And that's the first part to the entry confirmation. Second thing is you want to check for confluences, right? Confluences that support your entry. Okay, so after seeing the signal, you want to check for a confluence. That's just an extra, should I say, two-factor authentication kind of thing. Next thing, which for me is almost like the most important thing, is your stop loss. Check for your stop loss. You want to know where your stop loss is, so don't take any trade without putting a stop loss. See, if you take a trade, and you did not put stop loss, for some reason you forgot, even if you are in the toilet and you are about to drop, guy, stand up and go and put that stop loss. I don't care what it is you're doing. Go and put that stop loss, because oh my god, let me just leave it at that. So how do you check for your stop loss? There are different ways to figure out what your stop loss can be. Personally, I love to use the ATR. It helps me. It makes my work very simple. I don't have to start guessing, oh, should I put it here, should I put it there? Some people use market structure, right? A lot of people use market structure actually. Maybe below a support and resistance zone, below the previous high, above the previous high, below the previous low, whatever. Anything you want to do, maybe a few pips away from supply and demand zone, a few pips away from your support and resistance, whatever it is, just make sure that you have your stop loss locked down, okay? And once you have a stop loss locked down, please do not change it. Don't change it. You're setting this rule. You're trying to build a trading plan for a reason, and in building these trading plans, you're setting up rules for yourself. Don't change your rules. And number 7, where almost every other trader is, always expecting, your take profits, your target criteria. What is your target criteria, or what should your target criteria be? A lot of people tend to just put ridiculous. When I say ridiculous, they have no idea. They have no idea. Like, it's almost like in their subconscious, they don't understand. They don't believe that price can retrace. They just take the trade and boom, they leave it. They want to get 1 to 10. I'm not saying you cannot get 1 to 10 very easily, but bro, try. Use market structure. Look for where the previous high, or you cannot just leave your TP open and expect it to just fly to the moon. Your daddy is not the owner of the forex market, okay? It's best for you to have an idea where you want price to get to before you take out your profit. Now, how do you go about this? There are about 3 ways you can go about it. The first is for you to have a fixed stop loss, a fixed take profit. All right, a fixed take profit, and you know at the back of your mind that, okay, for every trade I am looking for a 1 to 2 risk to reward ratio. I'm looking for a 1 to 3 risk to reward ratio. For every trade, I'm looking for a 1 to 6 because I've back tested this, I've forward tested this. This always does a 1 to 6, so it makes sense to do a 1 to 6. Always, you can use a fixed take profit. Secondly, you can use a trailing stop loss, in the sense that you start trailing your stop loss, and wherever it hits, right, wherever it retraces, let's just say you're going for a buy, whenever it hits your stop loss in profit, that is where you close down. So it's usually ideal for swing traders, it's usually ideal for position size traders. Right now, my favorite would be to use both. You use a fixed take profit, then you let your runners let them run. Okay, so that is how to build a trading strategy. You have to look at these 7 components. Look through, make sure you have these 7 components on lockdown, and trust me, you are 100 steps ahead of a lot of traders. A lot of traders don't go through this. So let's just do a quick recap. Okay, first things first, your time frame. You want to be sure which time frame you're trading on. Are you a scalper? Are you a swing trader? Are you a day trader? Secondly, you want to look at your risk management. How much are you risking per trade? How much are you risking per time? How much are you risking per day if you're going to be a day trader? Okay. Thirdly, you want to confirm which conditions am I going to be trading in. Do I want to trade in a trending market? Do I want to trade in a consolidating market? Do I want to trade just reversals? Do I want to trade continuation patterns? Then you want to be sure of which market you are trading. Is it the forex market? Is it cryptocurrency market? Is it stocks you want to do, or you just want to do commodities? You want to do a mix of each of them. You have to outline that. Okay. Then you want to be sure of your entry confirmations. What is it that I will see that will make me take this trade? Right? Is it a bullish engulfing pattern? Is it a pin bar? Is it a doji candle? Does it have to touch the EMA first? Does it have to be a shaved head, a shaved bottom? What is it? Does it have to be a morning star, evening star, or I'm only going to be trading heads and shoulder patterns? I'm only going to be trading flag patterns. Whatever it is, you have to be sure of what it is and stick to it. Okay, write it down. Then you want to check your stop loss criteria, and you want to check your take profit criteria. Why am I putting my stop loss at this point? Why am I putting my take profit at this point? You get all of this on point, and trust me, you are good to go. So that is a wrap for today, and I really do hope you enjoyed it. If you did, please hit the subscribe button, give this video a like, and I'll see you guys in the next one. Bye.